Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Hello and welcome. Before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of the patterns, levels, analysis or any related items on these my charts. This was all my own original work because I think you deserve to have that. So with that, euro dollar. First off, apologies for the moving averages. My chart provider has decided to throw a wobbler and push a price well above the top of my daily chart. That will a past price above my daily chart, so it knocks out all the moving averages. That all being said, a bearish closing Black Marobozo yesterday and fifth bearish Black Crow. The recent showrunner for this market, the late March to mid-May bullish shift pitchfork, is now downgraded, as yesterday saw the market capped by the 2019 high at 115.70 and pushed down through both the February and January 22 highs at 114.95 and 114.82 respectively, as well as the interesting and very shallow bright red neckline extension to the old August to September 2020 head and shoulders top. That's currently at 114.51, along with the June 2020 high at 114.22, closing below all of these. Further below, we have the July 23 high at 112.76 and the 2024 high at 112.13. This leaves behind only a late June to date double top pattern with a neckline in the 115.55 area, but also an early June to date head and shoulders top with a dark blue neckline currently at 116.17. Thus, the targets for these patterns are, for the head and shoulders top, we had a primary target X1 in the 113.10 zone with a harder to reach secondary target X2 down in the 114.41 zone. And for the double top, we have a primary target down in the 114.55 zone, something I pointed out last time, and a secondary target, harder to reach target, X down at 113.22. Finally, as I've said now repeatedly for months and months, we are set up with just about 7 months of this year gone by for a possible annual key reversal pattern here. Thus, if we close on Wednesday, the 31st of December 2025, either over 110.36 or under 103.53, then we're beyond. Anything in between, and we would have a lesser outside year pattern. I'm at this stage not even going to contemplate what the result at the end of the year will be, just that we are set up to achieve one, though right now it looks very much like an annual key reversal up. And so far today, a reactionary move back up over the June 2020 high and up to test the bright red neckline, but from below, but it's been capped at the moment. Cable, aka sterling against the US dollar. A very interesting and somewhat reactionary key reversal down yesterday after the previous session's hammer pattern, which is usually seen as a bullish reversal pattern, though not this time. It was a second close below and a full first real close below the dark blue neckline, currently at 133.55 of the new mid-May to late July head and shoulders top pattern, and also a first close below the rising mauve medium moving average. That's currently 133.41. We also closed well below the March 22 high at 132.98 and, most interestingly, below the interesting congestion zone between 132.46 to 132.65, so it's not a very big congestion zone. But that contains what I labelled as the old breach, though not broken, mid-April to date expanding wedge pattern, currently at 132.56 to 139.23. We also left behind, way overhead, the congestion area between 134.83 to 136.43. This is the one having a consistency I'd labelled as of treacle. So back to the head and shoulders top pattern, and we have a primary target X now in the 131.48 zone with a secondary harder to reach target X1 further down in the 129.40 zone. We're also set up now for this month to be a possible monthly key reversal. Thus, if we close tonight either over 137.33 or under 134.59, then we'd be on. Anything in between and we would have a lesser outside month pattern. Right now we're looking at a monthly key reversal down for June. Contrary to this, And finally, much like Euro-Dollar, we are set up here for this market to make that rarest of patterns a possible annual key reversal. Thus, if we close on Wednesday, the 31st of December 2025, either over 127.29 or under 125.11, then we'll be on. Anything in between, and we would have a lesser outside year pattern. And as usual, I am at this stage not even going to contemplate what the result at the end of this year would be, just that we are now set up to achieve one, though it does look like we are moving towards an annual key reversal up. And so far today, an immediate reactionary move back up from the open over the congestion between 134.83 to 136.43, but then back down below it and looking like a possible, if it was anywhere else, it'd be a gravestone doji, possibly indecisive doji, but looking possibly like maybe an inverted hammer pattern right now, but not exactly the wellest of all things, especially as we're so close to yesterday's low. US dollar against the Japanese yen. A key reversal up and bullish closing Mike Marabozo yesterday after the previous session's indecisive doji cross. Well, for starters, this killed off the idea of a possible 3-day bearish evening doji star pattern, but it did, especially the high and high close, show off a considerable part of the resistances. We stalled at the combination of the overhead flatlining gold long moving average, currently 149.55, and the 50% Fibonacci line, the July 23 to July 24 move at 149.61. These two had earlier stalled the market's rise 2 weeks ago. Meanwhile, below we have the two moving averages of the now flatlining mauve medium moving average, currently 145.69, and the green short medium moving average, currently 145.5, plus the dark blue middle time, currently 145.01, of the important, large, shallow, and longer term early July 24 to mid-January 25 bearish shift pitchfork. This is one of the two major patterns in operation here. Now, the other one is the broken bright red mid-January to mid-June, as I say, broken descending expanding wedge pattern, which is currently 138.82 to way off the bottom of my daily chart. This had a break higher in mid-June, though it was more like a stroll higher. The primary target X for this is up in the 150.5 area, so not too far away, just over the gold long moving average. Whilst a secondary much harder to reach target X1 is up at 158.85. So far today, a dip below down to the lesser Fibonacci line at 148.68 before a move back up to test the combination of the 50% Fibonacci line and the gold long moving average, and we are pushing up through it now and starting to approach 150.50. US dollar against the Chinese yuan, the CNH, the offshore Chinese yuan. A key reversal up after the previous session's indecisive doji cross pattern. Prices pushed up through and I suppose used as a base the flatlining green short medium moving average, currently at 718.08, but before pushing up through and closing over the congestion between 719.64 to 719.91, and that's actually quite a narrow congestion, consisting respectively of the May 2020 high and the 50% Fibonacci line of the September 22 to April 25 move. Prices finally halted, unsurprisingly, further up at the dark blue neckline extension, currently 721.32 of the late August to early November 24 reverse head and shoulders pattern. That is just ahead of the slowly declining mauve medium moving average, which is currently 722.06, and the flatlining gold long moving average further up, which is currently at 724.5. Finally, this is just a strategic observation once again, and I'll continue making it here. Please note how the gold long moving average, which is currently, as I say, 724.46, 45, 50 area, has been, despite some up and down waves, relatively flatlining for quite a while. So that if prices do stray too far away from it, then they seem to be brought back towards it, and that applies in either direction. Well, so far today, a dip lower down to the congestion between 719.64 to 719.91, piercing it but not exploiting the move lower as the market pulled back up over it right now. US dollar against the Brazilian real, a schizophrenic pattern yesterday. It was a key reversal down that was also an indecisive spinning top pattern. This after the previous session's immediate countering bearish dark cloud cover pattern. That was also an outside day, I suppose, really could count that in. Support still came in, though it was on a closing basis, from the shallow declining green short medium moving average. And that's currently at 555.93, whilst resistance overhead was partially from the unsurprising bright red upper time, currently at 560.31, of the mid-December 24 to mid-April 25 bearish Andrews pitchfork. This pitchfork has been the showrunner here since spring. However, the rise was stopped by the further overhead slowly declining mauve medium moving average, currently at 563.80. This mauve medium moving average is also close to the interesting and significant 38.2% Fibonacci line of the April 22 to December 24 move at 565.07. Looking below, we have the purple May 24 today uptrend, currently at 542.47, which is in a congestion zone below from the 50% Fibonacci line of the April 22 to December 24 move of 544.57 down to 540.16. This congestion also contains the dark blue neckline extension to the June to September 2024 head and shoulders continuation pattern. That's currently at 542.45. US dollar against the Mexican peso. A combined key reversal up, bullish engulfing pattern and bullish closing white Mariposa yesterday after the previous session's indecisive doji cross. We are now well away overhead from the bright red upper time, currently at 1870.04, of one of the two showrunners here, which is the robust bright red early May to late June bearish Andrews pitchfork, plus even higher away from the other major pattern here, the age-old and breached many times early May to date dark blue bear channel, currently in 1839.74 to 1865.51. This is enough of a breach higher that I should start considering topside areas, and these start with the green declining short medium moving average, currently at 1892.59, followed some distance higher by the congestion band made up from the March 20 low at 1915.03 and the 50% Fibonacci line of the November 20 to 24 move at 1920.38. Now we are also set up now for a weekly key reversal here. Thus, if we close tonight either over 1873.10 or under 1852.10, then we'll be on. Anything in between would have a lesser outside weak pattern. Now, right now we are looking at a weekly key reversal up, which offsets the quite extensive follow-on lower from the original move down below the overhead very wide congestion band that eventually became a rectangle top pattern and is centered on the September 2022 high at 2057.65. Now, so far today, a cautionary pullback lower, back into an earlier congestion band between the 50% Fibonacci line between at 1876.94 down to, well, it contains that, and it's between 1876.94 to 1885.40. It's no more than that at the moment.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.